Alrighty, what is going on, everybody? Welcome back to another quick CYPRX video breakdown, going over some technical analysis confluences that we delivered to you all in the private community, showing you how we were able to execute a trade on XRP this morning during New York session, utilizing some of the things that we go over with inside the course material. So with that being said, we're going to be breaking down piece by piece, and I'm going to have the confluences displayed up in the top left-hand corner of the screen for you all so you can kind of go over them as we are looking at this trade idea. Now, real fast, in yesterday's pre-plan analysis, I had mentioned two things for you all. I had mentioned that I will be monitoring XRP's price action like a hawk. I'm going to be monitoring XRP's price action like a hawk because when it does break out of this dumbass consolidation that it's in, it is most likely going to make a volatile move. And I had also mentioned the overall potential analysis that I'd be looking for was some sort of buy scenario, volume and volatility to kick up in the market based off of potential pullbacks in dollar that we could see overnight or heading into this New York session. If that does not come into fruition, we see dollar weakness tomorrow, a slight retracement. The second scenario that I'd be looking for is a break above 50 cents, some sort of volatile move out of the top of this range and a retest to look for another leg higher to come and correct more of this previous downside move. Looking for immediate targets. If you can catch the bottom of this range at roughly around 53 to 54 cents for scalps, if you're trading leverage. Further upsided targets at roughly around the top range of 54 to 55 cents. But just so that way you all can see that via the pre-planned analysis that I give you all, coupled with the technical analysis strategy that we utilize, you can situate yourself on the right side of the market. So obviously, of course, this is a layering effect. We're not going to focus too much on fundamentals today, more so just technical analysis. Always do a pre-planned analysis. So that way, when you start to see the confluences fan out, you can start to react to the market accordingly. If bearish confluences started to play out today, like a break of market structure to the downside, or any sort of sell volume and volatility coming into the market, showing excessive moves to the downside, we would have been able to react to that. We did not get that. We got the opposite. We got the definition of bullish order flow. So that's where we're going to start with today. Identifying liquidity or a set of liquidity. Now, coming into this New York session this morning, I woke up at about 4:05, 4:15 a.m. And I came and sat at my computer and I was watching this move prior to the New York session start to fan out. Now, what I was seeing in the market for step number one, identifying liquidity or a set of liquidity, is I was looking at this area above these highs as potential trend line liquidity. We know that market makers like to trap retail traders in the market because they know that market participants like to trade some type of retail strategy. So we can assume that if the market makers are not going to come and take out lows, zooming out just a little bit, we can see a low here. We can see lows here. If they're not going to target lows, it's only logical for them to then target highs. So where, in a sense of highs, would they most likely be targeting? Retail liquidity, right? Or we can assume that retail traders that trade trend line patterns have open leverage positions attempting to sell this trend line above highs. With that being said, that is where I identify liquidity coming into this New York session. Logically speaking, that if we're not going to target lows, then I, as a buyer or a person, an individual looking to buy, am going to set my take profit at these local highs because that's most likely where the market makers are going to be targeting. So identifying liquidity or a set of liquidity, step one, done. Paying attention to a sweep of liquidity, indicating that banks are in control. Now, more immediately, for that sweep of liquidity, I was looking at this area of interest above these highs intraday during London session that came into fruition and seeing this bullish move as that sweep of liquidity and this lower high as another area of interest that market makers came and scooped money out of the market that existed above these highs from over leveraged traders on the wrong side of the market. You can imagine people with stop losses here in this area. And you can also imagine people in this area with stop losses above highs. So understanding that market makers are the only people with the amount of money to move price action like this, we now know this sweep of liquidity here signals that banks are in control. Now, another thing I want you to pay attention to is down here to the left-hand side. What else do we see? We see a low pre-engineered into the market during Asia session. The banks during London session came and pushed price beneath those lows and printed a market maker pattern, which is a violation of lows, a higher low that comes in after, that leads to a higher high formation, breaking previous bearish market structure. This is a market maker pattern. This is something that I teach you guys to pay attention to in the CYPRX course material, right? So now we have number one out of the way, which is identify liquidity in the market. We obviously, of course, have trend line areas above highs. We have trend line areas above highs intraday during London session. And we have pre-engineered lows during Asia session that got manipulated, where then after we saw a shift in market structure, where we can see failure swing lows, i.e. higher lows coming into the market that lead to new highs, right? So with that being said, seeing this price formation, I then said to myself, well, if the market makers aren't going to target lows anymore, and they are now creating higher low, higher high formations, this is now my bullish range in which I'm operating in or looking to operate in during New York session to take potential buy positions or continuation moves to the upside to further target higher prices, right? Now, number three, gathering more of the confluences, we want to confirm that price is moving away from major psychological levels. In this case, because we're trading XRP up against the United States dollar, we're looking for the quarter theory. Well, here you can see price moves away directly from the 48775 key psychological level, where that is where the higher low comes in after the sweep of this low, signaling that market makers are now in control, failing to print bearish order flow, which would be a lower low, lower high in the market, and instead coming in with buyers in control, printing higher lows, making new highs in comparison to previous highs in the market, i.e. the definition of bullish order flow, right? So seeing all that, remember, I woke up this morning at roughly around 4:05, roughly 4:15 a.m. when price action was here, came, sat on my charts before 5 a.m. when the markets opened. So I had plenty of time to do this analysis, right? Not only that, but I gave you guys a pre-plan analysis last night, letting you all know what I'd be looking for, which was some type of bullish order flow, right? Number four, bullish or bearish match of momentum in our favor, okay? So again, we see a bearish move to come and liquidate pre-engineered lows in the market. And then we see a bullish move in our favor. Remember, my pre-plan analysis was I wanted to see some type of bullish order flow or buy scenario play out. Well, here we can see that scenario played out to the absolute T of a degree. We now have a new range that we can be looking to trade from because we had a new higher low, higher high formation in the market created, right? So number four, check, bullish order flow or match of momentum in our favor. This bullish leg completely engulfed and matched the previous bearish momentum, signaling that market makers used this downturn during London session to manipulate lows, sweep liquidity from those lows, and shift market structure. Number five, we're looking to identify a break of structure properly. Well, here you can again see, I feel like I'm beating a dead horse, this higher low at the 48775 key psychological level that led to this new high in the market intraday completely engulfed this previous bearish price action. Therefore, we can classify this as a break in market structure, or a BOS. So now that we've identified a break in market structure, we've identified 1 through 5 properly, next thing to do is to place our Fibonacci. Remember, I mentioned to you all that if we're not going to be targeting lows down here, or the lows from London session, which you can clearly see the market makers did not want to do by printing this higher low. If they wanted to target lows, they would have created a new lower low, lower high, lower low formation. Instead, we saw buyers come in and then print a higher low, higher high formation targeting highs. This is a shift in order flow. Next thing to do is to place our fib properly so that way we can ride the wave to the upside. We know that if they're not going to target lows, they're going to target highs. So as intraday traders, we want to get in on the price movement to the upside. How are we going to do that? We're going to use our Fibonacci tool. Again, remember, a tool that is utilized not to gauge where price action is going in the future, but to gauge where premium or discounted price could potentially be in the near short term. So, knowing that this is our new bullish leg after the manipulative move here, taking our fib from the low to the high that broke market structure and extending that over to the right-hand side, this is now how we placed our Fibonacci properly on this particular move here for New York session. Now, just real quick, I'll again show you guys my settings so you can copy them in your trading view. Take a screenshot. You can mimic my colors, whatever the case may be. But this will allow you to see the Fibonacci retracements and the discounted prices set up for 62, 66, 70, and 79% discount from where a previous bullish or bearish move happened. Now, ideally, here at CYPRX, what we like to see is we like to see our positions hit at least 70 to 79% discount. So what we want to do before the move starts to pull back, and again, a lot of people will ask, well, Cypress, how do you determine when's a good time to draw your Fibonacci? Well, I tend to say that I like to draw it. Remember, again, I woke up when price action was here, so I had plenty of time to gauge this price action. I like to draw my fib when price from the bullish move, if I'm looking for buys, retraces at least 25% from the previous bullish move. So was this a 25% retracement? Not really. So let's play some more price action out. Is this a 25% retracement? Yes, it is. So that delivers a signal to me that it is now a good time to take my fib from the low to the high to gauge where I could potentially get into price. Now, the next thing to do is to, number 7, confirm discounted price matches up with key psychological levels. Well, here, the 62 to 79% is going to be our area of interest where we're going to want to get in to a discounted position. So we can just go ahead. We can identify that this discounted price, we can delete our fib now, knowing that this is our discounted area. We can identify some key psychological levels. Remember, we're trading United States dollar up against XRP or XRP up against the United States dollar, right? The bottom of this range was 79% discount. And would you look at that? Does that line up with a key psychological level? Absolutely. The 49-cent psychological level to the absolute T measures in at the bottom of this range, which again, we know, taking our fib from the low to the high, was the 79% discount, right? So that would be the most ideal area for us to get into a move. At the top of the range, we have the 62% discount. Well, let's see if that lines up with the key psychological level as well. It absolutely does. The 49,200 psychological level is at the top of this range. So these would be the two ideal levels in which we would want. Remember, when we drew our Fibonacci, price was at a 25% discount. These would be the levels in which we would want to get into a discounted position. So all that was left for us to do is pay attention to number 8. Wait patiently for discounted price to get the best risk to reward ratio. Logically speaking, we know now that market makers are not targeting lows anymore. So to get the best risk to reward ratio, we can then move to number 9, where we set our take profit areas and our stop loss areas. Logically speaking, to invalidate this bullish trade idea that we have, which is seeing a shift in market structure, violation of previous lows, market makers manipulating price, shifting order flow by printing higher low, higher high formations, and wanting to get in on a discounted move to take price back to the upside, where would be the most logical area for us to set our stop loss? Well, to invalidate this bullish move, we would need to print a new what? A new low in the market in comparison to the previous low. So the most logical area for us to place our stop loss, a tight stop, would be beneath this low. A second area of interest to place a more extended stop loss would be beneath this low. So for our stop loss, once price comes down into our discounted area, we'd want it a tight stop beneath the 48775 psych level and an extended stop loss beneath the roughly around 48600 psychological level. For take profit areas, remember, we're looking for a 1 to 2, 1 to 3 minimum in order to execute trades. Well, if our stop loss is nice and tight beneath the 48775 psych level, and we're targeting this immediate high, understanding that market makers are done targeting, or in the moment, done targeting lows, Targeting this immediate high puts us at a 1 to 2.5 RR. So is this a logical and sensible trade to take to expose our capital and get at least a 1 to 2 risk to reward minimum? Yes, it is. That lines up with the criteria that we look for to take and place trades here at CYPRX. Take profit 2, we can zoom out and we can start to target again that trend line area that I mentioned to you guys at the beginning of the call. We can start to target these highs, maybe potentially intraday highs above the medium of Asia session, or even these highs here at the beginning of Asia session when the market rolled over previously from New York session. Extending our take profit area up into these highs puts us at a 1 to 3.5. So is this a good, sound, and logical RR trade? Absolutely. Have all the CYPRX confluences up to this part, at least the ones that I'm showing you all today, again, playing out to the T? Absolutely. This should now lead you to number 10. Risk management, no over leveraging, not getting ahead of yourself, allowing the market to humble you, not being greedy, and then having the confidence to enter the trade once price comes down into discount. And boom, sure enough, price came down into our discounted area, tapped into 49 cents. I believe I actually entered the trade at roughly around the 49,150, so roughly here with the buy limit. Trade was almost immediately put into profit, give or take a couple of minutes. And sure enough, we saw price flip back to the upside, failure swing lows in the market again, showing you all that market makers are not interested in targeting lows anymore. Boom, take profit 1 was hit. Price played out. Take profit 2 was hit. Beautiful 1 to 3 RR trade on XRP, utilizing the sound CYPRX principles that I give you guys and doing a pre-planned analysis the night before so you all knew in advance what I was looking for in the market. Now, again, I'm hoping that price can maintain bullish order flow above the 50-cent psychological level and that we can start to potentially target higher highs here in this area, maybe at around 51 to 52 cents, maybe even extending those targets up above these intraday highs at 55 cents. But this is just me showing you guys how I was able to utilize the information that I provide you all in the CYPRX private community to capitalize on intraday scalps on XRP. Now, you can use this information regardless if you're a dollar cost averager or a day trader, because as a dollar cost averager, let's say, for example, today during New York session was the day that you wanted to buy XRP. Well, when you woke up this morning and you saw that XRP had extended this bullish move, would you want to be buying XRP here as a dollar cost averager? No. You would want to be using the CYPRX confluences to wait for a discounted price to facilitate capital in this area. Boom, dollar cost average in using the CYPRX confluences, and that's how you see immediate portfolio appreciation in your DCA positions. And you can use buy limits on Uphold, on Caleb and Brown, and on many other exchanges, even without trading leverage, right? So just take that into consideration. You can use the strategy as a dollar cost averager or an intraday trader. So anyways, many blessings to you guys. I hope that that gave you guys a little bit of an insight into how I was able to scalp this position on XRP this morning, paying attention to structure shifts, paying attention to order flow, break of structures, giving you guys a pre-planned analysis the night before. So I already knew what I wanted to see heading into this New York session today, and then capitalizing on those market movements in the moment when all of the price action comes into fruition. As always, many blessings to you guys, and I'll see you all in the next video breakdown.